Hi, I'm Apurva Sheth and I welcome you to this brand new edition of Fast Profits Daily. Now, the year 2019 was very phenomenal. Right from Arcom filing bankruptcy in February to PM Modi getting re-elected in May to December recording the highest ever SIP inflows in mutual funds. Now, markets have been through all this in 2019 and Sensex has moved up by 14% in the calendar year 2019. However, there is one another asset class which has moved up much more than Sensex. It has beaten Sensex hands down. You would be surprised to know it is gold. Now, gold moved up by 24% in 2019. Now, not many people saw this coming. However, I was amongst the few who had picked this trend in gold correctly. In fact, I had picked this trend in gold much earlier in October 2018. That's when I published my first ever article. Actually, I was getting married in December, and one chart which was worrying me the most was gold. I knew that I had to shop gold before it was about to launch, and so I did. And I even encouraged my readers to do that as well. Now, I'm sure that including me, many of my readers are also delighted. However, why am I talking about all this today? Well, the two things which helped me pick this trend in gold are suggesting me that this year in 2020 there is one another asset class which could do the same. So what are these two things? First is of course price action. Now the price action in gold, which included the domestic price as well as international market prices of gold, were shooting high. The USD INR exchange rate was also suggesting that the dollar is likely to strengthen, which would affect our the import price of gold. Apart from this, there are a few people whom I hold in high regard, and they had similar view in gold as well. So I knew that when all these things put together, if it's suggesting that gold is likely to head higher, then it definitely will, and so it did. So now in 2020, what is the best asset class to invest in? Now the markets topped out in 2018. To be precise, the Sensex as well as small cap and mid cap stocks or mid cap index topped out in January 2018. They corrected for a couple of months and then recovered. However, Sensex recovered more than the other two indices, small cap and mid cap indices. Small cap was beaten down the most, whereas Sensex continued its march and it headed higher, and it is even hitting new highs every passing day. So now there is a wide divergence between Sensex and small cap. Sensex is the loved darling, whereas small cap indices are the hated child. So what's likely to happen in 2020? Well, I believe that this is going to change. Small caps are coming back in fashion. Now, what is the reason behind this that I'm saying it? Well, we'll have a look at this chart. Now, in my previous videos, I have shown you greed and fear cycles in Sensex, in IT and auto index, and I have also been using ratio charts for picking some of the best trading opportunities. Now, in this particular chart, I have combined the two. So as you can see on your screen now, this chart is plotted from 2005. Now the Sensex to small cap ratio chart follows a cycle. Now this cycle is of 144 weeks. Now there is no magic behind this number. I've chosen this because it simply works. Now you can see that the Sensex stocks move up when they are in safe mode, whereas when the markets are in risk mode, people tend to take more risk, and that's when small caps tend to outperform. So the first safe mode that you can see out here, Sensex outperformed small caps by 50%. Now what does this mean in simple terms? Let's say if small caps moved up by 100 rupees, then Sensex stocks or Sensex moved up by 150 rupees. That is, they outperformed the small cap stocks. So now in the risk mode which followed, Sensex stocks still managed to outperform the small cap indices by 15%. Now this is an exception which we can simply ignore. Now moving forward, in the next safe mode, Sensex stocks outperformed the small cap indices by 47%. In the risk mode which followed later, Sensex stocks underperformed the small cap stocks by 34%. Yes, the small cap indices beat the Sensex stocks by such a wide margin. Now, in the safe mode which followed next, Sensex stocks managed to outperform by 24%. Now we are into the risk mode, and this means that market participants are willing to take more risk, which is good for the small cap stocks. So they are marked in the green out there. So the small cap stocks are likely to outperform during this phase. Now this phase has begun from June 2019 and will last till March 2022. So we are already 6 months into this cycle, and the small cap indices have just begun its rally. So I feel that this year could be the year where small cap stocks or small cap indices manage to outperform the Sensex stocks. Now that's on a relative basis, but you don't make money on relative basis. You make money when these stocks or indices outperform on an absolute basis. Now why I am saying that this could happen, now that's when the second part comes up. Now Richa Agarwal, who's the editor of Hidden Treasure, is probably one of the best person to look at when it comes to the small cap space. Now she has been writing a lot about the rebound in small cap space. Now I'd like to share two charts with you here which she has written to her readers. Now as you will see in this chart, the small cap index has ended in the red for 2 consecutive years. Now this is a exception. Over the last 10 years there has never been a year wherein small cap index has fallen for 2 consecutive years. So simply going by this, the law of reversion to the mean would kick in and the small cap stocks are likely to move up. Now in the next chart you will see the changes in the aspects like earnings, market cap, PE and liquidity over the last 2 years. So as you will see, the market cap of the combined small cap universe was down by 39% over the last 2 years. The price to earning ratio dropped from 29 to 13, and the average liquidity is down by 50%. However, one of the most important things is the combined annual profits of the small cap universe, which is up by 33%. So now you see that the time cycle, the fundamentals as well as the price action, all three are aligned, and all the three are suggesting that the small cap universe is likely to do well. So this is the reason why I am saying that small caps could be the asset class to watch out for in 2020. If you are planning for new investments, then small caps must be in your radar. You should not miss them. Now what is the best way to capture these gains in small caps? A simple way could be to buy a small cap mutual fund, or if you are willing to take direct exposure, then you can follow someone like Richa, who's been tracking the small cap space and picks small cap stocks regularly. And if you are willing to take some more risk, then I am recommending trading the opportunities in these small cap stocks, or for that matter any other stock which the Equity Master team has recommended. So under my service, I recommend trading opportunities in these stocks, and since the year began I have recommended a number of small cap stocks so far. So the going has been good and the small cap space is bouncing back. So you should not miss out on any of these opportunities coming your way. So that's all for me for today. Thanks a lot and have a nice day. So please don't forget to subscribe to our YouTube channel, and also don't forget to sign up to the newsletter, the Fast Profits Daily. If you sign up to this newsletter, then you'd get access to this free guide, how to trade markets like a pro. So don't miss it.